So how was our week last week? Well, we had a good week. We went into the week short, and that was the right decision to make. We went into the week short of the energy sector. The energy sector tanked last week. So we profited on that trade. We also went in short of the S&P 500. It pulled back. We profited on that trade. And then we went long. We went long of the ARK fund, ARKK, and also Zoom. And we made money there, not big money, but we scalped the profit. And we closed out the session on Friday flat. And despite the fact we took no losses in our account, the account didn't grow. And the question you may be asking is, what happened? What did you do wrong? Well, I didn't do anything wrong. What happened is that, remember that swing trading equities is only a portion of our business. We have a very big options writing business as well. And while we took no losses in that portfolio, we saw that portfolio hold us back. The reason is that volatility is what you're looking at right now. You can see that volatility rose last week, and that increased the value of our options positions. And as option writers, we want those premiums to decay. And while we do have time decay, the offset was that the increased implied volatility did not allow for our account to grow. Now, what do I suspect is going to happen next week? Well, remember that next week we're going to have the consumer price index come out. And then on Wednesday, we're going to have the Fed decision. I'm not sure if he's doing a press conference. Probably will. So I suspect after the market reaction to the Federal Reserve's announcement that we're going to see implied volatility exit our positions, and then we'll realize time decay and also the reduction in implied volatility will allow that portfolio to grow. And for all intents and purposes, after the Fed announcement on Wednesday, the year is over. There are no other big announcements absent a geopolitical event that are really going to help drive equities one way or the other. Now, before I leave this platform, what you're looking at here is Tastyworks. I have an account with them. It's being AHCO'd in, meaning transferred from another broker. And I really love this platform. I love TASTYTRADE. That is their media arm. Tony Batista, Tom Sosnoff, really great guys. And they have great tutorials on how to sell premium, how to learn about premium. And again, that is TASTYTRADE. And they are a sponsor of ours now. There are only two sponsors that we have. Tastyworks is one of them. So use the link below. Great platform. Trade stocks, options, futures, all of these high implied volatility ranking watch lists. Those come pre-populated. I did not add these. I added these here, but I did not add these. Great platform. Use the link below. Set up your account today and learn how to trade options in the new coming year. And I don't mean buying the options. I mean selling the options. Be the casino and not the gambler. Let's get to the charts. Now, what I did here is I did a scan. It's called the 6-candle bullish roll. And it comes pre-populated as a daily scan in TrendSpider. But I modified it because I wanted to see stocks that were consolidating on a weekly time frame, because I always use the saying that the longer the consolidation, the greater the validation of any breakout. And I made a list of stocks that I liked, and we're going to walk through them right now. All of these on TrendSpider, these scans come pre-populated as well. So use the link below, get TrendSpider 7-day free trial offer. And folks, they are having, I just checked this out, they are having a 60% off sale over TrendSpider. This offer is going to be expiring shortly, so take advantage of it. Okay, so we've done our scan. We're ready to go here. Let's roll with the trades that we like. BSX, EA, which is a short, electronic arts, AHCO, CUTR, and MO, Philip Morris. Let's get to it. First chart up, BSX. In the healthcare space, medical device, and you can see that we are breaking out. And we are consolidating right at a price level of around 45.49. Volume last week rose. So while the markets were down on the week, Boston Scientific, along with the entire sector, did very well. It had broken out the prior week, pulled back, did a retest of support. Let me define that for you a little bit clearer with a support level. And there you have it. So we'll be talking on the weekend commentary with members about where we would want to enter the position, what our price target is, and where we would want to book profits or accept a loss. So BSX looking really good here. The next chart up is EA, Electronic Arts. Now, this one appeared as a short because this is a weekly chart. You can see that we had broken out several weeks ago, and we consolidated very nicely above this upper band of resistance in red, this fractal trend line. And what happened last week is that they saw a reversal bar. I believe their deal with Microsoft may not be going through. I'm not fluent on that. Fact check me, please. But that's the reason why you saw EA have a bearish reversal, and it gave up this breakout, which is considerably bearish. So it looks as though what they're going to do is they're going to rally it up to this upper band of resistance. If it appears that it's going to fail, then we'll look to lean in short on EA. If it manages to break out yet again on bad news, well, then it could quite possibly become a long. So we're open-minded here. We're not dead set that we must short EA. It's got to behave properly. If it behaves bearish, well, we go short. If it behaves bullish, we'll consider going long. We're capitalists. The next chart up is AHCO, Adapt Health. Now, again, remember our scan. 6 rolling weeks, bullish price action, and sometimes you get more, sometimes you get less. But you can see that we broke out the week of November the 7th. That was rejected. Then we re-broke out the week of November the 28th. And last week, we spent some time consolidating, and it looks as though we're getting ready for a breakout. So what I want to do is I want to know when, A, we hit this lower band of support, touch, bounce, and we will set up an alert here. This is a great tool to have, and you get alerted on your mobile application when you are a customer of TrendSpider. And we'll keep this active for a couple of weeks. That's alert number 1 that's set. Now I want to do another one up here. I want to know, just in case we never pull back, I want to know when we break out. And there we have it. Again, we'll keep this active for a couple of weeks. So our alerts are set. You can go over to the sidebar here and see that they are set. Now, one thing I'm picking off here is that this stock, this is the seasonality function. It's only going back 4 years. Let's go back to as much time they have. They only have a limited amount of time here. Now, the thing to keep in mind here is that the week we're going into is seasonally favorable for this stock, up usually 80% of the times. The final week of the year is up 100% of the time. But keep in mind, this is only 5 years worth of data. While it's some data, it's not a large pool of data that we're working with. Ideally, you'd want to have at least 10 years worth of data in front of you. But the other thing to mention here is that the second to last week of the year is up only, or has been up only 25% of the times. So keep that in mind as you're entering the trade, but also keep in mind, again, limited data. Don't put too much emphasis on seasonality for Adapt Health. But the chart looking good, great consolidation pattern. The next chart up is CUTR, CUTR. Now, this is off of the same scan that we ran earlier, and you could see that we spent many weeks consolidating, and then boom, it took off. Last week, it pulled back yet again to retest the breakout point, and these are automated trend lines, folks. I did not draw these lines. Take them off, put them back on. All right, so we pulled back to do a retest of support. We still closed down on the week. We may just get another pullback on the shares. So I'm going to set up an alert here. And members, what we're going to do on the week ahead commentary, which is where we review the closing price action of last week and talk about what we're going to be doing, our strategy for the new trading week. We're also going to go over these charts yet again, but we're going to do a deeper dive. Again, we're going to be talking about entry points, exit points, stop loss points, price targets, and I'll enter them in the members area so that way they can go back and reference them or see if I've changed the price targets or exit points. So if you're not currently a member, please sign up. 14 days free. Link below in the video description area. And if you sign up for the silver and gold level memberships, well, you get TrendSpider for free. A little bit of a note to myself. And we'll keep this active for... Okay, so our alert is set here for CUTR, looking really good. And the last chart we have on our list here today, folks, that's going to be Altria Group. Altria has put in a double bottom setup. Here's the left side of what I like to call a W formation or double bottom setup. Here's your left side, your pivot point, with the top of the pivot point or the center of the W being at $46.61. Now, after hitting that peak, we put in the right side of the W, rallied, consolidated very, very nicely. And if you take your crayon out, you connect the dots and you can see that you have a rock solid breakout. And now what Altria is doing is that it's consolidating. So what I want to know is, I want to know a couple of things. One, does it pull back and retest? And our alert is set. We're good to go here. By no stretch of the imagination on any of these stocks am I saying that these are buys going into the new trading week. We're going to be looking at setups on the week ahead commentary with members, which I'm going to go to in about 5 minutes once I edit this one. And we'll do a deeper dive analyzing where we've been on a monthly time frame, where we've been on a daily time frame. So folks, if you're not a member, please sign up for our 14-day free trial offer. Get TrendSpider for free. Don't forget, head on over to Tastyworks, use that link below. And once your account is live, you'll be able to access some of the most powerful options trading information that'll help you with success in helping build your options premium business, or if you're going to buy options, that's your decision. You can create lists by sector. The liquidity of the options, very, very important. Here, liquid ETFs, populates, liquid symbols, and they give you the implied volatility ranking. Why is that important? Well, if you're going to be a premium writer, if you're going to sell premium, if you're going to be the casino and not the gambler, well, you want to sell premium on stock that has a very high implied volatility ranking. And with a click of a button, they're telling you Nikola has very expensive options with an IVR, implied volatility ranking, of 100. So not only do you profit off of selling premium and realizing time decay, but as the volatility comes out of the options, you make much more money much quicker. So that's why it's always important to sell premium on options that have a very high IVR. And if you're wondering, do I send out trade alerts? Yes, I do. I post the actual trade confirmation in our Slack forum. Our trades are real. So please take advantage of that 14-day free trial offer. Sign up, get TrendSpider for free. Set up your account with Tastyworks. Thanks for being here. Have an awesome remainder of your weekend. Catch us live tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. And have a profitable trading week and an awesome, awesome holiday season. Be well.